Metro Manila and nearby provinces. This despite several groups calling for an extension of the strictest form of restrictions to further bring down the country's case load. The NCR Plus bubble, or Metro Manila, Bulacan, Rizal, Laguna, and Cavite, has been reverted to the looser modified enhanced community quarantine. Santiago City in Isabela and the provinces of Quirino and Abra are likewise added to the list of areas under MECQ for the rest of the month. Quezon Province was added to the areas placed under GCQ until April 30th, while the rest of the country is under a modified general community quarantine. Meanwhile, IHS Markit says the country's road to economic recovery is now getting less and less bright amid the sustained surge in COVID-19 cases. That's even as the government had reimposed strict lockdown measures. In its weekly economic preview, the global data analytics firm said it now expects a lower GDP growth this year of between 5 and 6%. This is lower than its earlier projection of 7.4% last month, before the government placed NCR Plus under ECQ for 2 weeks. IHS Markit's latest forecast now falls below the government's target of 6.5% to 7.5% this year. To minimize the anticipated impact of stricter restrictions on the economy, the Finance Department says the government needs to limit lockdowns only to defined high-risk areas. On top of that, the agency said the smooth delivery of goods and services must be maintained. The DOF said strict quarantine measures should be like fiscal incentives, which are time-bound and targeted, while avoiding any disruptions on the delivery of goods and services to soften the blow on the economy and employment. Okay, kicking off the trading week with a virus update, we actually have this new data from Bloomberg, which is basically number of vaccine doses. And you can see on my terminal here, the cases or the net change increase in cases worldwide is just below 640,000 new cases worldwide, whereas the vaccine doses in one day inched up by 13 million doses. Now, in contrast, you can actually see perhaps the Philippines has some data lag here, but no vaccine doses as of the last print of Bloomberg. But you can see those red bars here at least increasing throughout the past few weeks of March. You can also see the net change still above 11,000 here. I do want to show our viewers here a very interesting map. This is a global map wherein you can see the brightest of greens are the countries which have the most vaccinated compared to their population. Interestingly enough, you can see New Zealand and Japan here, but also Myanmar leading the charge when it comes to the vaccinated population. So again, cases now at 135 million, deaths at 2.9 million worldwide, and globally just below 750 million vaccine shots given worldwide. Now, over in the Philippines, however, we do have an issue in that there are 382 more COVID-19 variant cases here being detected, of which 170 are from the UK variant, 192 the South African variant, and the rest the ones that have been detected in Brazil, and one that has just been first detected here in the Philippines. This comes as we've got 146,519 active cases. This is 16.9% of our total cases active right now. In terms of the testing, 10 million individuals have been tested so far. We have a positivity rate of 9.25%. On the upside, we do have vaccines coming in. Second batch of Sinovac vaccines, another 500,000 doses of Sinovac coming in. That's part of the 25 million doses that we bought from China. That now totals 1.5 million doses of Sinovac that have been dispensed. We also expect 20,000 Russian COVID-19 vaccines. We have already administered 1.14 million vaccine doses. Now, shifting our attention towards the equity space, you can see on my terminal here, Asia Pacific opening a little change this Monday morning. This comes after 3 straight weeks of a Wall Street advance. A lot of things going on this week. U.S. will be releasing inflation data as well as China will be releasing their economic growth and retail sales on Friday. Now, let's take a look at our own opening here. The local bourse inching up a touch by 19.46 points. It's up by 0.3%, but still not back at those 6,600 levels. Recall that last week we slid the most in Asia, snapping a 3-day rally. That is, of course, on the back of net foreign selling accelerating. Now, here to talk to us more about how to play these markets, we have with us Matt Cabangon, president of AAA Equities. Good morning, Matt, and welcome to the broadcast.
Hi, Danie. Good morning. Thanks for having me.
All right, Matt. So let's kick off, of course, with the general questions here. MECQ. Does this even matter when it comes to the surging virus cases? We're still above 11,000 here. Do the investors feel that these 2 weeks of a very strict quarantine did anything to quell our fears of a worsening outbreak?
I mean, to put it bluntly, no, not at all. If you look at how our market has behaved over the last 2 weeks, it's basically been a straight line. It's been flat. What we have right now is the surplus of acronyms, ECQs, MECQs. I think, from my perspective, there isn't really a big difference between this week and last week. What the market needs and what the market's lacking right now is confidence and conviction that there is a direction, that there is another side, that the country is marching towards the end of this crisis. And right now, there's not a whole lot of that confidence going around.
Okay, what are investors feeling in terms of the vaccine rollout and the fact that, okay, maybe there is some uncertainty when it comes to the lockdowns, etc., but at least the worst is still over compared to last year, just for the fact that vaccines are already underway?
I think a lot of people are concerned that the Philippines is lagging behind internationally in terms of vaccine administration. I don't take as pessimistic of a view in that regard. In my mind, these vaccines are a matter of national interest. So naturally, they will be hoarded. They will be sort of overstocked, especially in countries like the U.S. and continents like Europe, where they're being manufactured. So I think we should expect a delay here in the Philippines. But the faster that people in places like the U.S. get vaccinated, then the faster that waterfall effect will sort of feed over here to the Philippines. So, I mean, while it's not an ideal situation to be in, we sort of just have to roll with the punches here. I'm expecting a large number of people to be vaccinated come Q3, and I probably at least 50% of people in Metro Manila to be vaccinated by Q4. So it's all a waiting game right now. It's a matter of whether expectations meet reality once we cross that threshold.
Matt, the stocks that have been moving whenever something is announced with all the acronyms, as you mentioned, of course, tend to be the restaurant stocks, the airline stocks, the malls. These are the three sectors that people are watching out for. But what is your, long-term outlook for these players, at least for the rest of the year? I mean, regardless of these lockdowns, are they actually on a better recovery trajectory, or has the optimism waned?
Well, compared to last year, it certainly will be better. Both consumers and businesses have gotten better at navigating this world that we live in. So I think there's no question that this year will be better than last year. What's difficult is that, keep in mind, our stock market opened this year at around 7,000. So people were very optimistic, right? People were expecting, okay, this is now the year where things go back to normal. And we're now starting off the second quarter, and it doesn't seem to look that way, where the index has slid back down to 6.5. It's really been a slow march downwards since the start of the year. It's a sort of coming to reality moment for markets right now. But as far as our daily lives, I mean, there's no question, right, that this year's performance will be better than last year.
Okay, can you say the same for the hospitality industry and the airlines, for example? I mean, the malls perhaps, the food perhaps, but the ones that have been hard hit, Cebu Pacific, 22.2 billion pesos worth of losses. I mean, to what extent can that even be recovered?
Yeah, well, that's, I think, the caveat to my previous statement. Granted, an airline like Cebu Pacific is better equipped and has a stronger balance sheet to manage this crisis than say Philippine Airlines, for example. But the question is, can this company survive uh, this level of capacity of air flight into 2023, into 2024? I mean, these are real questions that I'm sure management there is thinking about. Cebu Pac has raised some money. They have some runway in terms of cash, but uh, it's not a good picture once you start looking at this from a multi-year uh, perspective.
Okay, so still a caveat there when it comes to the worst performing sectors. And finally, just a quick check on the banks here, Matt. We do have a report from the IMF saying severe slump may amplify the risks for Philippine banks. There might be systemic solvency distress if the economic impact is worse than expected. They say that if the corporate earnings are weak this year, then that would add to the stress of the banks. How worried are you, and what's your outlook for the first quarter corporate earnings?
Well, the banking sector is just across the board dicey right now, right? We've gone through Anihan 1 and 2, and we sort of kicked the can down the road. But as far as systematic solvency issues are concerned, that's a very remote possibility. The Philippine banking sector is extremely conservative. I mean, even if some bankruptcies do happen, and we do expect some loan defaults to happen as banks build up their reserves, there really is no risk, or well, little to no risk of solvency issues. The BSP and the banks themselves have shown this through their very strong capital ratios, even throughout the pandemic. Now, as far as earnings are concerned, well, Q1 should be quite strong, actually. We saw improvements quarter over quarter in Q3 2020 and to Q4 2020. I expect Q1 21 to be even stronger than Q4. Now, obviously, not the same picture now in Q2 as we move to this lockdown. But I think Q1 should be a pretty strong quarter, but not something that will get people excited.
All right, so still some strength here when it comes to the resilience of the banking sector, and perhaps some better earnings that might come in the first quarter. But of course, a lot of downside risks still at play. Thank you so much, Matt Cabangon, AAA Equities. Checking in on the headlines, we're keeping our eyes on the national government's gross borrowings plunged by 89% to 54 billion pesos in February. That's from 480 billion pesos 1 year ago. Data from the Treasury Bureau showed that domestic borrowings totaled about 37.2 billion pesos in February, or about 92% lower compared to a year prior. This consisted of 30 billion pesos in treasury bonds and around 7 billion pesos in T-bills. Meanwhile, external gross debt also went down over 77% from 2020. However, the Treasury noted that for the first 2 months of the year, gross borrowings totaled about 764 billion pesos. This is almost 31% higher than the amount raised in the same period a year ago. Now, the Board of Investments will release a preliminary list of industries eligible for incentives under the CREATE Act. This comes after the new law officially took effect on Sunday. Trade Secretary Mon Lopez said that the list, together with the IRR, must be released during the first meeting of the Fiscal Incentives Review Board. Lopez added that sectors under the Investments Priority Plan will serve as the transition SIPP for the year until a new plan is approved. The 2020 IPP details priority sectors that would receive tax incentives amid the pandemic. These include essential goods and services, agriculture, fishery, healthcare, and telecommunications, among others. And that's the first look into the business day. Today is Monday, April 21st, April 12, 2021. Catch Business World live for the market close. That's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.